Let's just jump right in. Imagine being 34 years old and having absolutely everything. We're talking a six-figure salary, the big house, the fancy car, and a cool $1 million sitting right there in your brokerage account. That was Daniel Carter. He thought he had completely won the game of money. But here's the thing, and this is what we're really digging into in today's explainer. Becoming a millionaire doesn't mean you actually know how to stay one. We're going to break down this monumental, life-changing mistake that cost him almost everything, and more importantly, exactly how he completely rebuilt his wealth from the ground up, making it practically unbreakable. Seriously, put yourself in his shoes for a second. Imagine logging into your account and seeing that one single decision literally vaporized almost $800,000 in less than a year. It's sickening, right? So how did it happen? Well, Daniel took a massive, heavily concentrated risk on a private tech startup. A buddy of his, Mark, pitched it as the absolute opportunity of a lifetime. Daniel got completely blinded by the upside. He was so busy daydreaming about 10xing his money that he completely stopped asking, hey, what could actually go wrong here? So he pulled $900,000 out of his totally safe, highly diversified portfolio and just dumped it all into this one startup. He left himself with bare minimum cash to survive. And man, it's terrifying how fast wealth can just evaporate when a concentrated gamble like that goes sideways. One random Tuesday, Daniel wakes up to his phone just blowing up with notifications. Revenue is tanking, big investors are jumping ship, and regulators are suddenly knocking on the company's door. Boom, the stock drops 20% instantly. Now, Daniel completely froze. He told himself, it's fine, it'll bounce back. But by Wednesday, down 50%. His $900,000 was suddenly worth less than $400,000. He held on for a few more agonizing months before finally throwing in the towel and selling at around $110,000. In just a blink of an eye, the fortune was completely wiped out. But, as the dust started to settle, the real gut punch wasn't just the empty bank account. It was this harsh realization that making money and keeping money are literally two completely different skill sets. Think about it. Getting that first million took crazy hustle, blind optimism, and taking big risks. But keeping it, that takes humility, it takes frugality, and a whole lot of protection. When Daniel hit that $1 million mark, he fell right into a massive trap. He upgraded the house, bought the luxury car, started booking those expensive weekend getaways. His monthly burn rate just exploded. So when the crash hit, he didn't just lose his investment capital. He was trapped under this giant mortgage and an expensive car payment with basically zero cash reserves to save him. For the first time in his adult life, he was utterly financially exposed. So a few days after taking that final massive loss, Daniel goes over to his dad's house, basically bracing himself for this huge lecture. But instead, his dad drops this piece of wisdom that forces a total psychological reset. He tells him, your biggest mistake wasn't losing the money. Your biggest mistake was believing that you couldn't lose. Wow, hit the nail right on the head. The money was gone, sure, but the underlying disease was a total lack of respect for risk. Daniel had spent weeks reading all the hype articles, actively ignoring every single red flag because, frankly, he wanted to believe he was completely invincible. Okay, let's move into part one, the rebuilding blueprint. Now, to his credit, Daniel didn't just sit around wallowing in self-pity. And more importantly, he didn't go chasing another risky bet to try and win it all back. He sat down and engineered a really strict 4-step comeback plan. Step 1 was building a bulletproof emergency fund. He never ever wanted to feel that kind of vulnerability again. Step 2, diversification. No more betting the whole farm on one horse. Step 3 meant completely shifting his mindset to the long game and totally ignoring short-term market noise. And step 4, which honestly was probably the hardest for him, was aggressively hacking his lifestyle down to stay well below his income. He swallowed his pride, sold the luxury car, downsized his life, started cooking at home, and completely unlinked his ego from his spending. So instead of relying on that toxic, get-rich-quick mentality, he leaned hard into the absolute safety of a fully diversified portfolio. We're talking spreading his capital out across broad market index funds, super safe bonds, a really sturdy cash reserve, and just a tiny, responsible slice of alternative assets. He made a vow to himself right then that he would never put his financial survival in the hands of one single investment ever again. If one sector takes a beating, the rest of the portfolio is there acting as a giant shock absorber. Going through all of this, Daniel came to a really profound conclusion. He figured out that ditching the hype and taking the slow, boring path is actually the ultimate secret to becoming a financially unbreakable. I mean, think about it for a second. Fast wealth is so exciting. It's what everyone talks about online, right? The massive crypto pop, the huge tech buyout. But fast wealth is incredibly fragile because the massive risks you have to take to get it are the exact same risks that can destroy it overnight. Slow wealth, on the other hand, built brick by brick through index funds and strict savings, builds this incredibly dense foundation that is just incredibly hard to crack. Which brings us to part 2, executing the comeback. Because look, it is one thing to draw up a blueprint on paper. It is a whole different ballgame to actually live it out day after day, especially when you perfectly remember what it felt like to have $1 million and now you're starting from basically zero. Rebuilding took relentless discipline. No magic formulas here. Daniel slashed his living expenses so dramatically that he hit a 40% savings rate. 40%! And every single month, rain or shine, up market or down market, he automatically funneled that cash straight into his diversified portfolio. Strict dollar cost averaging. After about 2 years, that steady reinvestment really started to take root. And by year 5, the absolute powerhouse engine of compound interest had accelerated his recovery, pushing him right back over that $1 million finish line. As he likes to say now, the first million made him confident, but the second million made him humble. And that leads right into part 3, 5 rules for lasting wealth. Out of the ashes of an $800,000 disaster, Daniel pulled 5 rock-solid rules that we can all literally start using today. Number 1, never confuse confidence with certainty. No matter how great a startup looks, it can still go to zero. Number 2, diversification matters. It is literally the only free lunch you get in investing. Number 3, beware lifestyle inflation. And we're going to dig into that one a bit more in just a second. Number 4, please don't invest out of FOMO. Remember, Mark told Daniel this was the opportunity of a lifetime, and that fear of missing out completely hijacked Daniel's logic. And finally, number 5, building wealth takes time. There is absolutely nothing wrong with getting rich slowly. I really want to zoom in on that concept of lifestyle inflation for a minute, because let's be real, Daniel's investment loss only became a full-blown catastrophe because that luxury car and that massive mortgage made him totally vulnerable. Lifestyle inflation is so sneaky. You get a promotion, you buy a nicer car. You hit a big milestone in your portfolio, you suddenly need a bigger house. You feel so much richer, but your actual free cash flow, the money that actually gives you safety and breathing room, hasn't grown at all. If your expenses keep scaling right up with your income, all it takes is one bad month, one job loss, or one market crash to just instantly wipe you off the board. Daniel learned the hard way that a high income does not mean you're wealthy if you're spending every dime of it just trying to look wealthy. So as we wrap up this explainer, I want to leave you with one final question to really challenge how you're looking at your own financial playbook right now. Take a hard look at your portfolio, your daily spending, and how you react when everyone's hyping up the next big thing. Are you out there chasing that rapid, thrilling high that Daniel chased with his 900 grand? Or are you meticulously, quietly laying down the bricks of a diversified long-term portfolio that's going to protect you when things get ugly? Because remember, the absolute fastest way to build wealth isn't always about taking on more risk. Sometimes it's just learning how to avoid the fatal mistakes that can tear it all down. Thank you so much for joining me today as we unpacked Daniel's incredible comeback. Keep building, keep protecting your downside, and I will see you next time.